Okay, guys, I had to restart the live for a moment. Apologize for that. I don't know what was going on, but I'm going to start again. So welcome, guys. It's been a crazy week, including on live sessions and the internet. I guess the internet's crammed with so much activity because of what's gone on all over the world, Silvergate and all the rest. Now, I won't waste your time. I'll keep this one short just to get you guys where you need to be and what the plan was for today. So first off, the first trade I'm looking at, my main focus has been on major pairs is gold. Now, gold has been absolutely brilliant. It's done over 1,000 pips long and also over 1,000 pips short. It's been an absolutely crazy range on gold. Now, what I would say is that we are in a very significant place. And to understand that, I'm going to start from the weekly, which is where I left off on the last, I guess, 50-second live session. So if you look at the live session beforehand if you want to. If not, it's fine. We can just use the markings from here. You can take a look from where we are. I'm going to do some quick markings here. So first things first, all right, on the monthly time frame, gold has given us a very important stop hunt. So we have a type 1 monthly, and this induction here is the trigger of what we've had for most of 2022. So this is a very strong short that the price has done. Now, in comparison to the bullish side of the market is not as strong, but nonetheless, the price has broken market structure. So if I draw this here, we have over here the break of market structure that I call MSB. So if I put this here, market structure break, okay, we've had a break of, okay, previous bullish market structure. I'm going to put pre-bullish, pre for sure. All right. So this previous bullish market structure that we've had, the price has come back into the supply order block that produced the short in the first place. Now, in the long-term picture of what gold is going to do, we are definitely strongly bullish. However, there is an aspect to gold where we do have a very strong short coming because of inflation. This is an inflationary driven short. Now, the price will go far down and our targets are to the next long-term or long-time liquidity pool, which is down over here. And if you look at what the price has done is returned into the supply order block. So if I put this here, monthly, I just call it MN for short, monthly MN supply to represent the monthly. And let's darken this out so that it's a bit more clear to all of you what the price is doing. So if I go over here for blue, oops, not that blue, we'll go for this blue here. You'll see that the price has done quite a bit of a reaction in this area. So this last movement that we had last month, the market took the high of the previous month. So February took the high of January and it's also come for the low of January. If I put this here, and it's also pushed down here into this range too. So what's the plan for gold? What is the price trying to do? Well, for me, I'm expecting this to be the final push for us to get a short. And if I go over to the weekly here, you'll see that price has returned back to this area here. We have an algorithmic level here. This is not a normal Fibonacci. It's not the traditional type that retail traders use. This is a modified one that has levels that algorithms use in the market. And so the expected channel range of entry is somewhere between wherever we are now all the way up to even above this high possibly, because the price could still take the high of the previous week. Now going on to the daily time frame here, what we've got going on, let's look at this. The price has entered into the D1 supply area. So if we look at what we had an induction here for a short. We had a break of market structure on that time frame with the massive short, which I gave you guys the entry for, by the way. I hope you did take it. And if you did take it, put some comments below. Let me know what you took and what profit you got. But we had a short, and then we had this kind of range of a short, which means that the bearish liquidity started to fan out. We had a trigger right here, which produced a massive long, which we still have a liquidity gap for over here. So gold is going to give us a very strong short soon, inevitably. But there is a bit more of a long action left, I would say, on the price action. We still need some more bullish activity going on. So the two scenarios I gave to my students, and I give it to you guys all too. You are my global students all around the world, and my aim is to share with everyone. But for the WJ Academy students who are within the academy, this is something I posted to them about 2 or 3 hours ago. So this is just fresh off the press. So there are two very simple scenarios of what the price could do. The first is scenario 1, which is we need some sort of trigger, some sort of induction of the highs to push the price short, and that can be our entry. The second side of the story is that we could also have the price taking the high, which in this case will push the price to, now to explain this area here that we have on the weekly, this beige box is the weekly supply zone. That's the key area of supply that we're looking at. Now, there are two nested zones of daily supply that we could use to operate on, the lower time frames. The first type is the one that the price worked with here. Now, because this is the high of the previous month and the price didn't take the low of the previous month, we may have an induction where the high of February is run into March, and we could have one more strong bullish push, which is another 300 or 400 pips. Now, there are two supply zones within the weekly range. The second one, the higher up one, is this one right here. And this one right here is another nested D1 supply zone, which if we were to, I know this may be a bit difficult to see and you may have to zoom in, but me putting this D1 supply zone over here, you can see there's a thin green line, maybe green line. If I use another color, maybe you can see this thin area. Okay, maybe not that color, I need a darker color. Let me just go for something like a blue, maybe that might work. So if it, okay, still doesn't work. All right, let's do some colors that actually work. Let's try pink. All right, still not working, but I will get this. I'm going to find the color no matter how long it takes because it's important to do so. Let's see if I can try sienna, see what happens there. Okay, sienna doesn't work. If it doesn't work, I'm just going to draw two lines to explain it very quickly, but I just wanted to show you in color. Okay, so maybe that works. So if you notice, there's a thin, maybe if I zoom in just a bit and mess up my markings, you can see there's a very thin green area here, which is the merge between the weekly zone, which is this beige area, and the turquoise area, which is the D1 supply area. These are the two areas that the price is in. So what does that mean for you? Well, in price action terms, it means that in terms of a second scenario, if I was to readjust these lines, the exact area or wickage that the price should get to should be in this small range here, providing the price stays within this weekly range. So with the speed and velocity that gold is moving at the moment, I don't think gold is done going short. There is one more left, one more short left. And we have to think about this in market terms. Now, if you want to be successful with trading, always think like market makers. How can they be wicked to everyone? What are traders all looking at that they can go the other way or entice them into the wrong direction? Well, one of the easiest ones is that everybody can see in this market that there's a liquidity gap right here. And so because there's a liquidity gap here, everybody will be thinking we're going to sell. And right now, for even people who trade supply and demand, which is still good, we'll be looking at, okay, I'm going to place a sell and put my stop loss here. That's what they would think. So the market, if this is the case, if they see the number of orders and the volume of orders towards the short side, then they could run the price higher and get to an area that seems more insignificant. And not only just insignificant, an area that looks like it's going to continue going strongly bullish. Now, what would that do? Well, if you're a trader and you're already in the long from anywhere along this bullish trend line, a super bullish trend line, what would you do? Well, your first thought would to be, well, okay, since the price is strongly bullish, what can I do to get in? I'm going to keep on buying, especially if you see the price rallying past here quite strongly. So in this rally, when the price gets as if it's going to break out to continue, which remember, these highs up here, for those of you who are traders, and if you're new to trading, don't feel bad. But just to give you a bit of history, after the 2008 financial crash and the previous crashes beforehand, we had some highs that were formed. The first one was in 2011. This was the previous all-time high for gold. And after lockdown happened, we had a new all-time high for gold. And this move was a move based on the fact that, store of values in terms of currency, the potential of store of value for currency wasn't really great. So the price of gold really rallied up. And also interest rates were really low for the US dollar. So that also helped with, a strong gold value. Okay, into 2022, when the Ukraine war broke out, we had another situation like that. And that was because, of course, Ukraine was almost instantaneously banned from the world economic systems of the world, so like SWIFT and stuff like that. And so there was a rush for gold, even because of the price of oil. People were trying to hedge their money in gold as a move to protect themselves from the inflation that is what we're experiencing now because of oil shortages and things like wheat shortages, all of those different types of shortages. Okay, so moving forward from that, to give you context, these price points here, the above 2000 levels, are very strong psychological levels. And if the price starts to near towards those, many people will be looking for a long. Okay. So I'm not surprised that the price is pushing the way it is, and I'm sure it's probably going to push slightly further. Okay. So my idea is that probably scenario 2 is more likely to happen than scenario 1, just because the obviousness of scenario 1. Okay. That's my conclusion there. Now, we've had a very interesting, time in the market of, trading. Things like all sorts of pairs have been going all over the place. It's been a crazy time of trading for definite. And I do think that, looking at all of these pairs here, I could go through so many different analysis that I have, but as I promised to do so, I'm going to go through all the major pairs. So I'll start with Euro USD. So Euro USD, I do think we have a long on our hands. We have the Euro news tomorrow, interest rate decision, and conveniently, the price has taken the low of the previous month. Now, I'm in Euro USD on my funded account, and it's been a battle to stay in. I do believe that the price is going for a long. Now, if you trade whatever time zone you're in, you'll notice that the market is slightly different. Like right now, it's 4:19. It's 4:19 UK time GMT. And on the market watch, it says 7:19. So the market's 3 hours ahead. Now, this usually happens at least twice a year, when we're coming into British summertime and when we're going into British wintertime, and the hours go forward and backwards. There's a small interlude where the market time changes also, which is due to Australia, I believe, changing their time as well. They also have, I believe, their own type of daylight saving hours. So, as a result, we have, sorry for my phone, guys. As a result, I do expect Euro USD to give us a long. With the positive interest rate decision that's most likely going to happen, it should give the euro a boost, and which means that we should see Euro USD push for a long. Euro USD, I do think that there is still unfulfilled efficiency of supply around this range right here. And I do think that there's opportunity for the price to go for it. And so that's what I've been hanging on to, just watching the price bouncing back and forth. Now, for this trade to work out for me personally, at least, even if the body of the candle doesn't close beneath or if it does close beneath this H4 demand zone, I would like to at least see the wick of the candle stay beneath here, but not the body. So if there's a body close on the H4, and this is why this H4 session means quite a bit, if the H4 session that we're looking at here, the body of the candle closes beneath, then we will have a continuation short. To give an example of this, and where possibly that could still give us a long, even if the body closes, is if I take a look at what we had on the D1. So on that day when the price was, pushing short the first time, we had a daily close with the wick of the candle, not the body, beneath this low, which is the low of February. And that's enough of an induction trigger to push us for a long. Now, as of recent, we had an induction on the north side into supply as well, which is a strong reaction. And therefore, you can see why price pushed, 200 pips short. But looking at the grand scheme of how price is operating, there is still one more long that needs to be had for Euro USD to have optimal area or be in an optimal area for it to short, which would be from here. And then we have the massive short. So I'm banking on the fact that the price has taken the low of that week. And similar to what we had in this reaction here, where there was an initial move. So if I go over here, there was like an initial reaction here. Price pushed up long, and then for a moment took the high of the previous day. Let me just drag this here. And then what we saw is that the body slightly closed beneath this area. But before you knew it, the price was going back over for a massive long. But I do have high hopes that the price will stay within this range and give us a long, at least up to about the high of this massive movement here. Because again, characteristically, this short that we've had has no break of, it has a break of market structure, but no return metrics at all, no return price action. So since there's no return, this was a fast move of some sort to fill out all the blocks and stuff. So I expect the price to push us into the long direction at some point. So yeah, I'm really holding on with Euro USD. It's been a tough trade to hold on to, I won't lie to you. I've had to close a few times, but I mean, even on the 30-minute, this induction here with this candle lets me know that we should soon be on our way for a long. And I do think the market's just playing a game of hard to get. All right. So Now on mine, this is a doji candle. I don't trade dojis because that I trade them. I guess I trade how the wick behaves, but not necessarily the wick itself. It's not a signal for me to enter, but just how the wick behaves. So Euro USD for me, I expect it to be a long. And we'll look at the dollar index to conclude. Now, USD CAD is another fantastic trade which happened, and I didn't take this one either, unfortunately, but it did give us a pretty good long. If I go over to the H1 here, there's a little bit of a gap left to fill out, which is about 7 pips or so left. Now, it did give us a strong trigger for a short, and I do think this is the markings that I left behind on the last video that I did, and you can see the price has followed through absolutely to the T. But I still do think that there is room for USD CAD to go short one more time. There is a liquidity pool underneath this first major price cap here, and I do think the price will come back down at least around about here. Doesn't have to come down all the way, but at least half of the way down to this area, and then off we go. So looking at the price action here, once the price fills the gap, I want to see how the market is going to behave. Especially because of this, the nature of how this supply zone is behaving. This is a special type of supply zone, and I'm just interested to see what the market has to offer on that front, really. So I think we do have quite a few good trades on their way coming. I just think that personally we need to be prepared for whatever the market has to throw at us. And it has been a tough market, even though there's been many pips, okay? And I think now is time to really be prepared for, all of the great opportunities that are coming along. Now, next is USD CHF, and I'm kind of gutted myself because you can see here I have the markings and it did exactly what I was looking for. Now, with USD CHF, I was waiting for the H4 break before I committed to it. It broke above and then beneath. And in fact, which I think was a bit cheeky, is that the entry I was looking for, which is where my line is, the market did it at the new day. So if I explain what I mean, when the market opened for a new day, it opened into this entry. Now, I usually wouldn't take, I never actually really do take a trade that's like the US dollar versus the Swiss franc in the Asian session, because it's outside of his normal operation and liquidity time. So I didn't want to take a trade like that. And even in the morning here, because we're 3 hours behind time, this is actually 3 in the morning. So I was asleep. So to actually get a really good entry, I guess all the way until 9 o'clock, but then still it probably wasn't that wasn't the entry I was looking for. In fact, based on how the market behaves most of the time in terms of Asian manipulation into the London session, I thought the price was going to get down to this blue line and then start to push along. But we haven't had a scenario like that, which I find intriguing. And that makes me think that we do have opportunity to possibly get another chance to go for a short, as in one more entry. So I'm hoping that the price can come back down one more time and maybe just give us a little touch into this demand area one more time, just because when the market opened, if I zoom in here, you'll see why I'm saying I'm a bit suspicious of the price. If you see this low here, at market open, the price actually didn't return into demand before taking off for a long. So to me, I think this is more of a break of market structure and the premature long. I don't think this is the final long. Realistically, how the structure of order books work between different sessions is always the same, okay? And it's not because I'm just saying so, it's how the market operates. That's how money works. And so for me, the price hasn't actually entered into complete demand, which means we have unfulfilled efficiency. And that gives room for us to have one more pullback, whatever the trigger will be, which then would cause us to have an entry down here for USD CHF and then the long. So this is what I am looking for. Now with the long I'm looking for, this is a long-term long. This is the long I've been talking about for months and weeks. Okay, the price will definitely run these highs, but even more deeply we have, and you can see that I'm not lying about what I'm saying because my markings haven't changed from all that time back. We have this strong double top that formed, which was a natural reversal. And I don't trade double tops, but there is a lot of liquidity interest that will be at this point at some time in history. So USD CHF is a fantastic long. I mean, still, if you have a large account, you could have taken this and had a wide stop loss and just not worried about it. But it is a brilliant trade. And I just know that the price will give us one more pullback before it takes off finally. So, bearing that in mind, I'm really hoping for the best when it comes to the pairs that we're in. And I know that there's so much opportunity flying around that, I am kind of sport for choice. And I think for those of you, especially who are traders, you must be sport for choice as well. All right. So looking at the H4, all right, for USD JPY, this is another short that we've been expecting. Now, the path to the short has been a little bit more elaborate, if I could put it that way. The short that I was looking for was all the way back here in February. I was expecting price to push down short, but we didn't have that. And the reason I'm looking for a short is quite a simple concept. USD Japanese yen, in the grand scheme of things, is about to do an extremely powerful long. And the price, my first ever entry I took on at the beginning of the year was when the price took, as soon as the price took this low, I was in for a long. And I guess looking back now, I should have just held on to it until the gap that I saw over here. That would have been a great exit point. Nonetheless, there's still more opportunity to come. And last week, the price gave us an induction here of the previous weekly highs that we were looking for. And this is what's really carrying the price into this week. If I was to cage the price onto the daily, we have D1 supply over here. And let's put this over here. And then if you go over to the H4, then it'll make a little bit more sense, because especially because the price dropped near here at the end of the day, near the end of the H4's, well, end of the day, but in the last, but I'll say the last H4 session before the end of the day, in essence, the price gave us a strong short. The last supply zone of the day was formed. Price came back into that area for supply, and we've had a strong short, which should continue in the same direction. So, having that in mind, okay, it's, that the price has been pretty tough. And let me just put this here to get into, because really we should have had at least one return. I mean, on the H1 time frame, which is, something that I would use for structural analysis, we did have a break of market structure here. The algorithm of the market confirmed that this is a swing low because of this wick here. And then we had the body close. And then we have another confirmation of market structure break at this swing low over here. Okay, because the price tried to return back to this area. I think it actually did, okay, to the T before pushing short again. So this is a strong area of what we would consider price action for, and I'm going to put this here, consider price action for us to look for a short. Now, I do think that USD JPY would be fantastic if it could just come back here. And if it did and gave us this movement here, that would be great. But looking at the structure of the price, I don't think the price may come back all the way here. But what the market may actually do is just work with the swing lows as algorithmic points of kind of like checkpoints to continue. If I show you one that just happened recently, you can see here, this is another powerful and strong swing low. And you can see that we had another inducement above the highs here. And then we had another short take place again. So it shows you that with this market here, it will probably be wiser for the market to just continue going in the direction it was. And then from that, we'll be able to proceed for a massive, massive long, hopefully, after everything is done. Now, the massive long I'm talking about, to point of context, we need to get the price back down here and then we're on our way for a long. But even from where it is, I'm hoping that the price may give us a chance and pull back. And if you've been listening to me for a while, then you know that when it comes to Japanese yen pairs, I really do like them. And because of the structure of the economy of Japan, sometimes you'll find that USD JPY and other pairs have more correlation, or other Japanese yen pairs have more correlation than maybe USD JPY should have to Euro USD and the rest. Okay, and that's because the Japanese yen and the nature of the economy and how they manage their currencies very different from every other tier one economy in the major pair section. So we could actually get a pullback whilst others are still going long and short, and then take off down the other way. Okay, so I'm actually excited to see what the market has to offer with, in that regards. And let's see what the market offers us. All right, now NZD-USD is another one which is pretty sweet. Now, it still has a ways to go, because you can see we have a liquidity gap here and we have a pool of equal lows. You can see the struggle that the price has had to really go for a short. And if I was to just mark off this area here, you can see even though we have mainly bearish candles, okay, it's still been a struggle, lots of wicking going on. There's been a very high amount of volume, but the liquidity hasn't matched up to the volume. So this means most likely this is retail-based activity that the market is carrying along, even though we've had a great movement here. So what my hopes are is that looking at the price action of what we've had, we were supposed to have a long, and this long, I looked at it for so long. I wish I took it. It was a great trade. The only thing is that, of course, just like other pairs, Euro NZD needs to come back to this supply zone also. And the price is in a primary area that I was looking at for, to go for a long, which is this supply flip zone here. The price has come back to this area. It's giving us a trigger, and then the NFP news on Friday gave us kind of like the initiation move. Now the price is balancing off of an algorithmic level over here, and it may actually just stop here and continue going long, even though I know there's a gap on the other side of this, price. So we'll have to see. It's not confirmed for sure. I do think the price should go short, but if it doesn't go short, or if new liquidity comes into the market to push it short, that would also be fantastic too. So I would say we have to just hang in there and watch. Now, I think there is starting to be a deviation between different currency pairs, NZD-USD and also AUD-USD. I'm going to find it for you guys, and then I'll come to this amazing trade that we looked at. So AUD-USD is over here. Yeah. So if I look at AUD-USD, you can see that price is already pushed a lot further short than other pairs have. I guess AUD-USD and Euro-USD are probably in the same category. AUD-USD is almost about to fill out the gap that is created, which is between these two ranges here. Now, I have a clue that the reason why price may be doing that is because we do have high impact Australian dollar news coming in. Well, in my time, it will be about 30 minutes past midnight, so 12:30 at night before the price, takes off. So I do think that with AUD-USD, which is also a brilliant trade, and the trigger points that the price created to go for it, I think are absolutely brilliant. Now, it had a very beautiful run during the NFP news, but you can see, now the NFP news, if you're not too sure where that is, it's on Friday around these times here. This was the news. And you can see that near the end of the day, which was so mean, all of the gains that anybody made for the days were completely wiped out within an hour with just this one bearish candle, which was pretty mean, but definitely algorithmically controlled. So if I put this here, you'll see it. So that's the NFP. That was the pushback down. Now, for me, with such a brilliant trigger like this, there's only two options that AUD-USD can really give to us. One of them is that I'm expecting the price to just fill out this gap, which will be brilliant, and then we just take off for a long because we do need one, and it's definitely going to come into the market soon. The other brilliant situation here would be, and I'm going to put this here. If I go over to the D1, now on the D1 here, the only thing I don't like about this pair is that to the left, there isn't really, on the daily time frame anyway, there isn't really that much strong liquidity. There isn't actually any liquidity at all for bullish activity. So this long happening is either being derived from a higher time frame area of demand for the long, or the price is actually probably going to push down a bit further short before it goes long. And to explain what I mean, if I go over here and let's just draw out this area here, this is the next nearest very clear area of demand. Okay, on the weekly time frame, to add to the point, I'll just draw this here. On the weekly time frame, we have this area over here, which is a weekly demand area. Now, the candles haven't really formed properly, but this is a weekly area that prices used to go long, and now it's broken beneath it. It should be coming back to the other side, which is what gives me the thought that even though there isn't much or hardly any demand liquidity, the price can go for a long. If I go over to the H4 and we take a look, and I'll just drag this over to the left, on the H4 is where price is really hinged at. Now, if I just put these two red lines here to represent demand just for a moment, and we forget about the gap, then this is the only demand liquidity left. Now, you can see previously the price dipped into here, and we had a long that lasted for over 580 pips and more. And now the price is in that same area. What I find interesting is that the body of the candle hasn't closed beneath here. So none of these bodies here, and the price is very specific on how it works. none of the bodies of the candles have closed on the H4 beneath this area, which means we're right inside of the range. However, based on that kind of movement and the strong reaction we've had short, we'll have to wait for the news to come out possibly. Even though the gap is going to be filled and it could be a long, I think I would like to wait just because, of course, the low of last week is not too far away. And this gives us another two scenarios, guys. So this is the second trade apart from AD, apart from gold we're looking at, is this. If the price takes the low of last week with the news that happens at today, well, tomorrow, 12:30 my time, which I think is the unemployment rate. So it is very strong pieces of news. I wouldn't recommend to get into AUD/USD beforehand, even though it's so tempting to just say, you know what, as soon as the gap gets filled down here, I'm in for the long. I don't want to do that. I think it would be better to just wait because we may get the situation where AUD/USD says, you know what, I'm going to take the low first and then I'm off. Okay. And because of this kind of difference in price action between the pairs, it can really, account for why there's a difference. Even with NZD/USD, I do believe there's actually news today. Now it says 9:45. What? So is the new day 45 minutes into the new day? I think we have New Zealand dollar news, and that might be the perfect trigger to get us down another 42 pips, which is not too far before the price decides to really level up and go for a long. So there are opportunities all over the place when it comes to AUD/USD and NZD/USD. So I want to take a look at the news. Let's just take a look at the news and see what we've got going on. And let me go right here. If I pull up FX Street right here for you guys to look at. All right, so I'll just type this in FX Street. All right, so FX Street, let's look at the news. So, okay, we have the GDP for the New Zealand dollar coming out at 9:45. So in the new day, 45 minutes into the new market day, we have the GDP. Now, taking that into account, what does that mean for us? Well, according to this, the GDP year on year for Q4, so in essence, Q4 2022 compared to Q4 this year, sorry, that's Microsoft Teams, that's the WJ students of this profit that they've made, I think on GJ it looks like. So it's expected to be just over half for this year's reading in a sense. Now that Q4 is completely finished, they can calculate this value as we're ending Q1. So if we divide 6.4 by 2, that would be 3.2. So we're just above half. But the consensus, which again comes from very highly intelligent analytical offices, financial analytical offices, suggests to me that they do expect a negative value. And there's a very big jump and difference between these two figures. So that means the variance or the deviation is large. They do really expect a very negative outlook compared to last year for Q4. So sorry, they're comparing 2021's Q4 to 2022's Q4. And of course, 2021 December was lockdown, okay, for most countries anyway. And I remember New Zealand did have extended lockdowns because there were still outbreaks all over the place. So I do expect the value to definitely be lower, and it's reasonable as to why. The market may not react as much because if financial analysts take into consideration hedge funds and the rest, if they take this figure into consideration that there was a lockdown in December 2021, then the reaction might not be so strong. It will be bearish, but it wouldn't be like, 200 pips bearish. I doubt it, just because of the nature of the time they're comparing. But when we get to next year and we compare 2023's Q4 to 2022's Q4, because none of those situations are within the scope of lockdown, then you can have a better value comparison from that. So I guess the news will be bearish, which is a perfect position to put NZD/USD for one more short before a long. And that can be our second trade that we take, or third, in fact. From what we've looked at. Now, I'm laying out the infrastructure for all the major pairs so that you guys have enough to go by when it comes to your trades for your personal accounts. And then we can review at the end of the week on the game plan for next week, what went right and what went wrong, okay? And it's important to look at both, because you always learn when you lose and you always gain when you win, and you also learn too. So it's a win-win situation. So for Thursday, we have, as I said to you, at 12:30 my time, we have the unemployment change of employment and the unemployment rate. I always get this confused. All right, repeat. So the employment change, and we have the unemployment rate. So employment change is expected to be, it was previously minus 11.5K for February, is expected to be a positive result of 48.5. And participation rate is going to be about 0.1% more. Yeah, 0.1%, 0.1. Just call it 0.1. Could be more, but 0.1%. And then we have the unemployment rate is expected to drop by 0.1%. So previously it's 3.7. They're expecting around 3.6. It could be even less. But you can see that there's a very big difference in the forecast of the consensus from the New Zealand economy compared to the Australian economy. I do think the Australian economy has fared a bit better. I think it was the first country, if we ignore China, I think it was the first country to actually completely have zero COVID cases. I think it was. So they recovered pretty well. And I think as an economy, they haven't had to raise their interest rates as high as New Zealand has. I think New Zealand is right now at 4.75 or 4.5, pretty high up there with, you know, the Federal Reserve and Canada. But Australia, I think they're about 3.35%. So they haven't had to raise their interest rates as much. So inflation is still bad, but not as bad as New Zealand. And I think it's because of how well they managed to recover from COVID. So they didn't have to print as much money from the money printer and, you know, inflate their money supply, and of course cause value devaluation. So I think even for investors around the world, I think they've seen that as a positive and are willing to invest in Australia. And I believe this is why the figures we're seeing are looking positive. So if that's the case, and the news is going to be positive. Now, usually New Zealand dollar news and Australian dollar news cause a reaction on one another. So this New Zealand dollar news may cause the Australian dollar to have a little spike. And I'm guessing that the market algorithm may use that and, you know, to push the price into the liquidity gap that's been left over from the Australian dollar, maybe even take the low of the previous week. And then when this news comes out, if it is strongly bullish, then AUD/USD will start to go long. So that's really the analysis that I have for you guys. Tomorrow, of course, we have the news for the ECB at 1:15 UK time. And the interest rate is expected to go up. Of course, it will go up. And of course, that increase would be in the current climate of inflation, increase in interest rates, which is seen as a way to curb inflation, will be seen as a bullish event. And of course, market news is funny. During COVID, any economy that didn't increase their interest rates was seen as very bullish, because increasing interest rates, well, actually not increasing the interest rates at that time was a bullish thing to do, because it means that your country is recovering from COVID faster. If the economy interest rates didn't change, then it was seen as a bearish thing. And now increasing your interest rates is bullish for a completely different reason, because now you're trying to curb inflation. And and sometimes it's seen as a bearish thing if you hold your interest rates or even lower them. So there's a whole mixture of things taking place. And I think, as I told you always, that technicals always leads to fundamentals. So it's better to focus on technicals and then use the news to ascertain to where, you know, you're going to go and plan your trades. So in terms of trade timing, you can see that I have a range between 9:45 UK time, so about 12:30 at night. That's the range to look for the possible entry for NZD and AUD/USD. Now, if you're wondering, well, AUD/USD and NZD/USD, aren't they major pairs? Well, yes, but they're also Asian pairs, because Australia and New Zealand, in terms of the geography of the world, are in Australasia. So that Australasian Oceania, which is the old term for it, is their times are very lined up with Japan, and Australia is matched up with New Zealand and that whole quadrant of the world. So the AUD part of AUD/USD makes it an Asian pair, which means you can trade it during the Asian session and still come out with a good range of results. I've traded AUD/USD and NZD/USD in the Asian session many times, and it actually has produced pretty good results. So I would say it's not a surprise if the price does something, you know, of that nature. Okay, guys. So that was the last I wanted to say. I'm expecting to have some really good results as we move forward. And let's see what happens. Now, I hope you enjoyed the live. I'll be back again tomorrow as promised. And I'll catch you guys later, everybody.